Welcome to our 221st weekly webcast. Now, if this is the first time you're joining the webcast, welcome. And if you've been with us before, welcome back. Now, the way this call works is this is an AMA, like on Reddit, meaning you can ask me anything. You can ask me investing questions, business questions, or career questions, or any questions. And my humble goal is to help you take your career or your investment portfolio or your company to the next level. So please continue to type your questions there as I'm going to answer them all on this webcast. Now, today I'm going to teach you one simple finance math tip that will make it so easy to understand and enjoy valuing and analyzing companies. It's a lot of fun. And in about 1 minute, I'm going to mention a video game. And whoever answers a question I will ask about this video game correctly wins my silver MBA degree program for free. Now, at the start of last week's call, we talked about revenue drivers, which we use to forecast and value companies. And revenue goes at the top of the income statement. That's why they call it the top line. Revenue is the top line. Now, before I answer your questions, I want to quickly talk about the income statement. And we're going to do a very quick case study by looking at software company Oracle's latest income statement. Okay, now, if you're watching the replay of today's webcast, you can go to the description field and click on the questions asked if you want to fast forward through my quick income statement lesson. Thank you. Lastly, if you don't want me to start the weekly webcast with a lecture, if you want me just to jump right into your Q&A, please let me know in the comments below, and thank you. Okay, so most expense items on an income statement are a percent of revenue. And the income statement concept is really easy to understand. Now, of course, we want all of our expense items to be much smaller than revenue. And we look at most expense items as a percent of revenue. And we know that revenue, which is the top line of the income statement, minus expenses equals net profit. And net profit is the bottom line of the income statement. And it's what we use to value companies on a PE basis, meaning price to earnings basis. Now, there's two ways to grow net profit. One way is to grow revenue, and the other way is to cut expenses or make expenses as a percent of revenue smaller. Now, the second income statement line item is the cost of goods sold, what we call COGS, C-O-G-S, cost of goods sold. So if the cost of a cup of coffee that we sell is $1, and the cost of the cup and the coffee itself is 20 cents, then our cost of goods sold, also called COGS, for coffee is 20 cents. Now, if we also sell French fries for $1, and the cost of potatoes and the oil we use to cook the fries is 90 cents, then our cost of goods sold, or COGS, of fries is 90 cents. And if a company's revenue is based on consulting fees, and the company sold 1 hour of consulting fees at $100 per hour, and the cost of paying the employee is $25 per hour, then the cost of goods sold is $25. And so labor is included in COGS if labor is directly involved in making the product. And so revenue minus COGS equals gross profit. And of course, we'd love to sell much more coffee than fries, as we make 80 cents in gross profit for selling coffee and only like 10 or 20 cents in gross profit for selling fries, a lot less. Now, gross profit refers to revenue minus COGS. And McDonald's makes no money or barely any money, or gross profit, I should say, when they sell hamburgers. They make most of their money selling drinks and a little bit on fries. And now we know why employees at McDonald's always ask us, would you like a drink or fries with your order? Okay, let's talk about gross margins. So gross margins is crucial to understand. And gross margins equals gross profit divided by revenue. And here's that mathematical tip I'm going to give you guys, which is going to make math so much easier in finance and more fun too. So for the rest of your finance and accounting career, the best way to understand finance ratios is to always assume that the denominator is the number 1. Okay, so if we assume the denominator is 1, then we understand all formulas. For example, software companies often have gross margins of more than 90%. And that means that, remember the denominator? That means for every $1 of revenue, then software companies generate at least 90 cents of gross profits. Now, we know that gross profit is revenue minus COGS. Therefore, in the aforementioned example, for every $1 on the denominator, the software company makes at least 90 cents in gross profits. Now, too much inventory can destroy a company. Now, in my hands, okay, this is part of the prize here. In my hands, I'm holding a video game product that single-handedly destroyed the entire video game market due to inventory issues in the 1980s. Now, the first person that types in the chat there the name of the game and the name of the state where a gazillion copies of this game are buried in a desert due to excess inventory wins my silver MBA degree program for free. Now, having too much inventory can destroy a company. And inventory is listed on the balance sheet, which I'll briefly discuss at the beginning of next week's office hours. And this is why we can't just analyze an income statement and ignore the balance sheet. So we can't understand how healthy a company is just by looking at the income statement. Now, the best investments are often companies that don't need inventory, like cloud computing software companies or companies that sell their products first and then use the proceeds from the sale to build the product. Let's now pivot and talk quickly about revenue recognition. This is important. Many CEOs and CFOs have gone to jail by recognizing revenue far too early. And by law, we can only put revenue on our quarterly or annual income statement if we've delivered the product that the company has already purchased. Okay? So if a company pays us cash for the product and we don't ship it to them yet, the product, and we still recognize this as revenue on our income statement, then we can literally get arrested and go to jail. This is fake money here. But I don't use it in real life. Yeah. Actually, I tried to create an image here of money using Photoshop, and Photoshop shut down. It wouldn't let me do it. And you can't photocopy money either. It goes right to the police. The police are told right away. Okay, too much information. Not that I've tried that, okay? Okay. Now, it's crucial to only invest in companies that have reputable auditors, meaning a company like KPMG that reviews and blesses the financial statements prepared by a company. Again, many CEOs and CFOs have gone to jail for committing the aforementioned revenue recognition offense. Now, although there's no justification for lying about revenue recognized in a given quarter, C-level executives occasionally do this as they want to at least meet the revenue projections that they previously told investors about. Now, if a company sells a product, okay, they sell a product and they receive money, okay, for it, but again, they have not yet shipped the product to the customer, then this is called deferred revenue. Okay, and deferred revenue is part of the balance sheet's liability section because you're liable to deliver that product. And it's fascinating because quite often we see companies beat earnings and revenue expectations, but the stock goes down. Why does that happen? Well, quite often the stock goes down because of the decline in deferred revenue from the balance sheet. Okay, so think of deferred revenue as the pipeline for what revenue might look like on next quarter's income statement. Cool. Now that we've discussed revenue and COGS, we can move down the income statement to discuss the three main expense line items that represent operating expenses, meaning operating expenses are expenses that help us operate the business. So often the first line we see in the operating expenses section of the income statement is called sales and marketing, which is also referred to as S&M. Now, this category includes salaries and other expenses associated with paying salespeople, running social media marketing campaigns, etc. Now, in the operating expenses section of the income statement, we often have something called R&D or research and development. And this category includes salaries and expenses associated with coming up with innovative and new products or services to sell. The third and final operating expense line item is often called general and administrative, which is often referred to as G&A. And this category includes salaries to employees who help to operate the business, like human resources, accounting employees, etc. And if you're not sure if an expense is classified as S&M or R&D, then quite often we put that expense in the G&A bucket or G&A category. Now, some companies combine S&M with G&A, which is referred to as SG&A, which stands for Sales, General, and Administrative Expenses. Okay, now we're at the point in our income statement where we've accounted for the cost to make the product and we've accounted for the cost to operate our business. And so we can now discuss what's called the line called operating profit, the line. I placed the line in quotes there for a reason, because operating profit is referred to as the line. Just it is what it is. And items below the operating profit line, okay, are referred to as below the line. And operating profit is how much money we make from operating our business before we account for other expenses like interest, taxes, and non-cash expenses like depreciation and amortization. Now, I'm going to come back quickly to non-cash expenses in a second, which you'll see when companies report earnings. And we're going to look at Oracle's income statement soon, and I'll show you all of this. Okay, we'll do a real case study instead of just talking about theory. So operating profit equals gross profit minus operating expenses. And operating profits is about 2/3 of the way down the income statement. So we're 2/3 of the way done discussing the income statement. Now, operating profit is also called EBIT, which stands for earnings before interest and tax. And we'll talk about EBITDA, DA at the end there soon, which includes depreciation and amortization. I gotta use that humor. I've gone too long without it. EBITDA also stands for earnings before I tricked dumb accountant. Sorry. Okay, now operating profit margin is also crucial to understand. And operating profit margin equals operating profit divided by revenue. Okay, remember the mathematical equation I told you about, 1 being on the denominator, okay? So if we assume that the denominator is 1, then again, understanding all formulas is easier. For example, software companies often have operating profits of more than 30%. So this means for every $1 in revenue that the company generates, they make at least 30 cents of operating profits. And so operating profit margin is also called EBIT margin or EBITDA margin. If an EBITDA, the D and A on the end, only if the company includes depreciation and amortization on its income statement. Okay. Now, the reason that investors love to look at the line, meaning operating profit, which is also called EBIT or EBITDA, the reason that investors love to look at the line, meaning operating profit, is partially because different countries have different tax rates. And in order to compare companies on an apples-to-apples basis, it's really helpful to compare companies before taxes and before other below-the-line items that may not be based on cash items. For example, depreciation and amortization, which we'll talk about in a second. Now, the first item often shown below the line is interest. And this can be a positive or a negative number. And interest is positive if a company is collecting more interest than it's paying in interest expenses on their debt. And debt, we know, comes from the balance sheet. Now, interest is also a below-the-line item because most companies' core business is not making or losing money based on the amount of interest they receive or they pay. Now, we're almost done. Let's quickly talk about taxes. So if we're comparing an American watch company to a Swiss watch company, we know that both countries have different tax structures. So looking at operating profit makes it easier to compare the two companies. Also, some companies have lost so much money in previous quarters or years that they actually don't pay taxes every year, given what's called a net operating loss tax carry forward. All right, we did it. We made it to the bottom line. The bottom line of the income statement is called net profit, which is revenue minus all that stuff I talked about. So the bottom line is net profit, which is revenue minus COGS minus operating expenses minus interest minus taxes. Now, we also deduct depreciation and amortization if the company has mentioned depreciation and amortization on their income statement. Okay. Now, net profit is also referred to as profits, income, earnings, net earnings, and the bottom line. The bottom line. Okay. And what I'll do in a second is I'll show you a case study in real time on Oracle. So net profit margin equals operating profit minus all those below the line expense items divided by revenue. And if we assume that the denominator is 1, as always, and the net profit margin is 3%, then this assumes that for every $1 in revenue that a company generated, then the net profit is 3 pennies, which is normal actually for a small or medium-sized retail company that has to compete with aggressive discounting from companies like Amazon and Walmart. Now, you might have heard of a company reporting earnings and the company referring to the earnings as GAAP or non-GAAP. What does this mean? Well, GAAP refers to, it stands for GAAP, generally accepted accounting principles, and it includes all cash and non-cash items like depreciation and amortization. And accountants prefer to analyze historical GAAP-based financial statements. Now, finance professionals often like to analyze historical and projected non-GAAP financial statements. Now, non-GAAP is referred to as pro forma. And the reason that finance professionals like to do this is because accounting for non-cash items like depreciation or amortization has less of an impact on the cash balance of a company. So let's quickly talk about depreciation, which is a non-cash expense. Now, governments allow companies to expense items like a truck or a computer using the concept of depreciation. For example, if we bought a truck for like 10 grand, and we think the truck will be in operation for, let's say, 10 years before it stops working, and we assume we can't sell it after it stops working, then the annual depreciation is $1,000. And so depreciation is a non-cash expense if we include it on our income statement, and depreciation is so awesome because it's a non-cash expense and it doesn't cost us $1,000 in cash to use it every year. Okay, stick with me on this. I'll explain the math. So depreciation is wonderful to use, and we can still account for it in order to pay less in taxes. So for example, let's assume that our operating profit is $100,000. And assuming we have no below the line interest expense and our tax rate is 50%, then we're going to pay $50,000 or $50,000 in taxes, and our net profit's going to be $50,000. However, if we deducted the $1,000 annual depreciation expense, then our pre-tax income would be $99,000, and the taxes would be less than 50%, or less than $50,000. So our tax rate is on $99,000, which means that we're paying taxes of $49,500. So therefore, by accounting for depreciation, we'd actually pay $500 less in taxes. That's why people love depreciation. Now, different governments have different depreciation laws and different products that can be depreciated using different depreciation methodologies. Now, in the aforementioned example with the truck, we used straight line depreciation. Okay, the truck we purchased is also reflected as an asset on the balance sheet. Let's very quickly discuss amortization. So amortization, it's a little bit like depreciation. Amortization on the income statement, it often refers to the expensing of intangible items over time, like a trademark or patents or copyrighted intellectual property contents. So if a company buys another company, they can also write off the goodwill value, okay, goodwill of the brand they purchase over 10 to 15 years. Okay, now, since amortization, the expense amortization, does not cause a company's cash to go up or down on a repeatable annual basis, it's often not included when forecasting financial statements, okay? And it's a GAAP item, right, non-cash, and not, people don't use it when they look at non-GAAP, okay? And I'll show you with Oracle in a second. So when I forecast financial statements, I love looking at cash stuff, meaning non-GAAP accounting. And other non-cash items that are often not included in non-GAAP accounting include stock-based compensation, like tax deferrals and some write-offs. And when a company gives shares to an employee, the company doesn't incur a cash expense. It doesn't cost them money to create shares, right? It just creates more shares to give to employees. So as a result, we don't account for stock-based accounting when creating non-GAAP income statements, okay? And again, I'll show you Oracle in a second. Now, many companies that provide GAAP and non-GAAP income statements provide what's called a reconciliation table in their earnings press release. Okay, earnings press release is called an 8K. And that reconciliation table explains the differences between GAAP and their non-GAAP financial statements. So what I want to do right now is I actually want to go and show you an example of this. Okay, so what we're going to do in a second, and you can do this with me, is we're going to go to sec.gov together. Okay, and this is where companies must file their financial documents. And what we're going to do is we're going to look at Oracle, which is ticker ORCL. We're going to look at Oracle's latest earnings in what is called an 8K filing. So we can look at GAAP versus non-GAAP earnings and the reconciliation table and what the heck this means. Okay, so let's do this together. All right, so let's go up here to sec.gov. Okay, and up here, we're going to type the ticker for Oracle, which is ORCL. There it is there. Great software company. And we'll go down here to the 8Ks. So let me go to all filings. Okay. All right, so using a different monitor up here today. Okay, let's go down here to the current report. Okay. All right. So right here, this is the press release for Oracle when they released their last earnings. Now, the first bullet point you see here is the most important usually, okay? And here you can see that Oracle's GAAP earnings were 63 pennies and non-GAAP earnings were $1.21 per share for the quarter, okay? So the reason that non-GAAP is higher, meaning about twice as high as GAAP this, is because they did not account for non-cash stuff, okay? And what you can do as you scroll down through this press release here, and we won't go through all of it, I'll wrap this up quickly. What you can do is you can look at the non-GAAP and the GAAP income statements. Okay, so again, finance people love to look at non-GAAP, okay, because it doesn't include non-cash stuff. All right, so if we scroll down here, let's go here. Okay, so here's their income statement right here. And remember these two numbers here, okay? 63 pennies for GAAP, okay, and $1.21 for non-GAAP. Okay, so let's go down here to the income statements. Okay, so here's the income statement, revenue, operating expenses, below the line items down here, etc. And right here, we have the GAAP earnings per share. Okay, now the non-GAAP earnings per share is twice as high as this in this example. So they have to disclose why, right? They can't hide anything. So if we scroll down here, what we'll see is we'll see a reconciliation, okay, of GAAP to non-GAAP measures. And what they do here is they basically tell you the difference for the quarter between GAAP and non-GAAP, right? So earnings per share was 63 pennies on a GAAP basis, which includes non-cash stuff. But on a non-GAAP basis, it was $1.21. And this table will tell you the difference here. So what they did was they added back certain items. So stock-based compensation, they don't have to pay cash to issue shares, they just issue them, right? So they deducted that here for non-GAAP, okay? The same thing with amortization, depreciation, etc. Okay. So in summary, let's wrap this up. Revenue minus the cost of goods sold equals gross profit. Gross profit over revenue equals gross profit margin. And the three primary expense line items used to record operating expenses are usually sales and marketing, research and development, and general and administrative expenses. And operating profit, which is also called EBITDA, equals gross profit minus operating expenses. Almost done here. And operating profit divided by revenue equals operating profit margin, also called EBITDA margin. Please remember to put one on the denominator always. And items like depreciation, amortization, interest, and taxes are recorded below the line, meaning below operating profits. Depreciation is a non-cash expense and refers to the annual expense for an item like a computer or a truck. And amortization is also a non-cash expense and can refer to expensing a brand that was purchased, like intellectual property. And lastly, many income statements report two sets of financial statements, which I just showed you with Oracle. One of the financial statements they report is called GAAP, which includes all cash and non-cash items like depreciation and amortization. And accountants love to look at GAAP. The other financial statement is called non-GAAP, which includes cash-based items only. Okay, and finance people love looking at this when they project the future. And investors often love to use non-GAAP based financial statements, again, when forecasting financial statements. Okay, I will now answer your questions, okay, after I take a very quick break. And again, please let me know if you don't want me to start these weekly calls with a lesson. Now, while I'm taking a very, very quick break, what I want to do is I'm going to show you a really, really short video on how to protect your cryptocurrencies, okay? And please note, and I say this with love in my heart as always, if anybody pretends to be me on social media channels, which is happening, if anybody pretends to be me and asks you to invest cryptos, that's not me. Please report fraudulent accounts. Thank you so much. Now it makes sense why Facebook with Instagram is going to be allowing you to pay $11 a month soon in order to verify your accounts. Okay, I'll be right back to answer your questions, and I'll tell you, I'll reveal who won the Silver MBA prize today. Thank you. I'll be right back. Thank you. I want you to be really, really careful with your cryptos. I don't want you to leave them on exchanges. Okay, your cryptos, what I want you to do is I only want you to store them in cold storage wallets, like a Treasury or a Ledger Nano, for example, and not hot wallets like Coinbase, for example, online. And the reason I say that is a lot of cryptocurrency exchanges and companies are now going bankrupt. And the only way to secure your cryptos is to keep them in cold storage wallets, which I talk about in a lot more detail in my MBA degree program. Really quickly, I'll explain the difference between hot and cold wallets. Okay, so with your bank accounts, you have a checking account and a savings account. Okay, your checkings account has a slightly lower interest rate, right? And so you usually put a lot more money in your savings account. And so hot wallets, software-based wallets in the cloud, like on Coinbase, for example, okay? And so think of your hot wallet as like your checking account. It might be cryptos you want to trade, or hopefully not trade, but maybe, I don't know, buy products with or services, okay? Your hot wallet is like your checking account. Your cold wallet is like your savings account. And it's called a cold wallet because it doesn't need electricity to store it, right? Because you can take these USB terminal token wallets and put it in your pocket and not attach it to your computer at all. So the bottom line is this: please don't keep most of your cryptos online in hot storage wallets. Use cold storage wallets like the Ledger Nano S and the Treasury as well. All right, first question I've got here is from Chetan. How are you, man? He wrote, good morning. The question is, are exchanges and clearinghouses different, and why? What are their functions? Yeah, absolutely. So exchanges, the best way to think about it is a marketplace where you buy and sell stocks, okay? A clearinghouse, they kind of help the trades go through. So you might hear about the term settlement, or T+1 or T+2, which means after you buy or sell a stock, it settles in 1 or 2 days. That's what they say on trading floors. And that's what the clearinghouse does. Yeah. Now, the New York Stock Exchange and the NASDAQ are both clearinghouses and exchanges. They take care of all that stuff. Okay, next question is there a relation between Treasury bills and interest rates? Absolutely, absolutely. So what happens is the government, every Monday, they'll issue T-bills. Okay, and they're sold at a discount. So the way it works is, let me get a prop here. The way it works is, let's pretend it's a Treasury bill. They sell you this. I'm the government, you're the consumer, okay? I sell you this Treasury bill at a discount, and usually Treasury bills are sold in increments of $1,000 all the way up to $5 million, okay? And it's usually a duration of less than a year. So I sell it to you, okay? I'm the government, okay? You give me your cash. Now, I take that cash out of circulation, a lot of it. And we know that whenever supply goes down for any product, what happens is the price goes up. So as I take this money out of circulation, interest rates go up. Okay, so that's how it works. And if you want more details on interest rates, you can actually go directly to treasury.gov. Let's do that together, okay? So if we go here to treasury.gov and you go to data, you can find out what the interest rates are right here, okay, short term. So I'll go to the current month, go apply. And right here we can see that the 1 month here, okay, is 4.67%. And the long term here, 30-year, we see up here is 3.9%. This is an inverted yield curve. And what this means is it's most likely that a recession is going to come, because whenever you see an inverted yield curve, meaning rates are higher in the short term versus long term, it basically means that people are expecting a recession to occur. Why? Because people are expecting rates to go down in the long run. And rates usually go down when we're in a recession. So historically, in almost every situation where we've had an inverted yield curve like this in the United States, it's led to a recession. Now, in India, we actually have a normalized yield curve right now. Rates are lower now and higher, a little bit higher, in the long run. And they have 10-year there, not 30 years, which means that a recession is probably not coming in India. Yeah, and you can always backtest this data as well. Good question. All right, next up. If a company invests $50 million in debt for 3 days and collects interest, will they be taxed on the interest selected? Yes, they will. Yeah. Scenario 2, if a company invests $50 million in equity for 3 days and collects profit, will they tax on the profits collected? Only if they sell those shares. Okay. If they get a dividend, they're taxed on the dividend. Okay. And a lot of billionaires don't pay taxes. And the reason is, like in 2007, Jeff Bezos didn't pay any tax. In fact, he got a tax refund for his 4 kids as dependents. And the reason that a lot of billionaires don't pay taxes, which is not fair, is because in order to pay taxes, you have to have a recognized event. Like you have to actually sell shares, for example. And in 2007, Jeff Bezos did not really sell any shares. In fact, the 400 richest families in the United States pay about 22 or 23% in tax, which is way, way below the highest tax bracket. It's not fair, but you have to have a realized event in order to pay taxes. Yeah. And even Warren Buffett said it's not fair that his assistant pays more percent-wise in taxes than he does. I think we need tax reform. Okay, I am a capitalist, though. All right, next up, what does it mean? Good till canceled, a stop of 60 and a limit of 65 buy. Yeah. So when you buy a stock in the stock market, usually people buy at what's called a market order, which means you buy at whatever somebody wants to sell it at. You can also put in a limit order. For example, if I want to buy Coca-Cola shares, which is I think around $60 now, I could put in an order that says 55 limit. Okay. So if the stock drops to 55, the trade will get executed or not. And sometimes they call it GTC, which means good till canceled. Okay, so that's what a limit is. A stop is quite often referred to with hedge funds who want to get out of a position if a stock hits a certain level. So, for example, in January of 2021, GameStop's stock went up 29.4 times. And what happened was a lot of hedge funds were short, and hedge funds like Melvin Capital went belly up. And investors lost about $6 billion. And so hedge funds with GameStop and other meme stocks in January of 2021, they were stopped out because they were short the stock. And when you're short a stock, it means it makes money if it goes down. But if GameStop was $50 and I was short right now, and I set a stop loss to get me out if the stock rises to 60, then 60 is my stop loss limit. So hopefully that explains. If you have additional questions about that, please let me know. And a lot of really wealthy people lost a fortune in early 2021 on GameStop. It wasn't just hedge funds. Apparently, Michael Jordan lost $500 million trying to short GameStop as well. Then, yeah, don't short stocks. So if you want to bet against a stock, because if a short goes up, your losses are unlimited. Instead of shorting a stock, I recommend looking into buying a put. Okay, so for example, with our Coca-Cola example here, let's say that I think Coke is going to go down. If I shorted Coke and it went up a gazillion percent, my losses are nearly unlimited. If I bought a put, which is protection, basically what would happen is if Coke went up, all I'd lose is the amount that I spent on this put. Yeah. So be really careful. In my MBA curriculum, I teach a lot about options as well. I don't recommend that anybody trade options until you practice for at least 6 months, and never underwrite or sell options because your losses can be unlimited. Yeah. And Warren Buffett called options and derivatives financial weapons of mass destruction. He said that in the fall of 2008. Okay. Next question is, can you talk about the depression and stock market crash between 1900 and 2000? Yeah. So there was two notable crashes in that time period. One was in 1929, where a lot of investors had gotten loans to invest, and there was a lot of speculation in the markets, and the markets went up like crazy. And then there was just a crash after that, which caused a depression. And then what happened was the SEC was formed in 1933 to make sure that the stock markets aren't as volatile. And the SEC did a great job all the way up until 1987 on Black Monday, when there was a 20% one-day crash in the markets. Yeah. And whenever you see a crash like that, you buy no matter what. Yeah. Because I promise you, a year or two or 10 years later, whatever, you'll be up a lot. Now, in 2008, the markets were down materially. And we were very fortunate at that point in time that the Federal Reserve chairperson was Ben Bernanke. And I say that because Ben Bernanke, he went to Princeton for his PhD, and his PhD thesis was depressionary economics. And so he single-handedly created the TARP program along with Hank Paulson, which helped to rescue the economy. Yeah. And whenever you have a crisis, then what happens is regulation comes, which protects consumers. And we're seeing that now in cryptos. With the FTX crisis last year, what we're seeing is a lot of regulation coming. The SEC will regulate cryptocurrencies. All right. Next up, Shaitan wrote, are outstanding shares and issued shares the same? So issued shares are the ones that trade on the market. Okay, like you see them, the daily volume. Outstanding means all shares owned by insiders as well through options. Okay. And issued shares is what you look at in order to calculate the price earnings ratio, meaning earnings per share. Yeah. Okay. Next question is, can only hedge funds generate more than 20% after Warren Buffett? So anybody can generate 20% on a portfolio if they do particularly well in a given year. So it's hedge funds actually, it's interesting. People think that hedge funds are trying to make as much money as possible. That's not the case. Hedge funds' primary focus is number one, capital preservation, and then number two, generate a positive return. And a lot of wealthy investors that invest in hedge funds, and you have to have a liquid net worth of $1 million in order to do so. A lot of wealthy investors, they invest in hedge funds to preserve capital first, and also in big down years to not really lose much money or maybe make a little bit of money. And so if you think about it, a hedge fund refers to in your backyard, you have a hedge around your house, protecting your house. Okay. All right. Next up, a question is, how do I get a startup a loan? Yeah. So a couple things. I don't ever recommend getting a loan to start a company. Because what happens is if you miss a debt payment, the bank can take everything. Of course, you want to register your company as well by going to LegalZoom.com or some other website that has cheap legal services. I'm not sponsored by anybody. You want to register it first so that they can't come after your house if something goes wrong, as long as there's no fraud involved. I recommend instead of getting a loan to always get equity investors, high net worth investors, to invest a minority stake in your company. Okay. And I teach about this in my MBA degree program in the third semester in the venture capital boot camp, based on my experience working in VC and starting many companies as well. Always go after high net worth investors because the sales cycle is quite short. Now, if you want to learn how to get access to high net worth investors, aside from taking my MBA degree program, you don't have to take it. What you can do is I have a book that is applicable to everybody in this call. And this book here is called Networking to Get a Job, a Promotion, or Anything You Want. And so you go to harounmba.com. Let me zoom in here slightly. You go to harounmba.com and download this book for free. It's called Networking to Get Customers, a Job, or Anything You Want. Yeah. Okay. All right. And I just saw that Damian Lewis is coming back to Billions for the next season. I can't wait. It's awesome. He hasn't been there for a while, and the show's kind of gone downhill. Yeah. Okay. All right. Next up, we have Ginny, who graduated from my Platinum MBA program several years ago. Good to see you. Ginny's from Vietnam. She lives in Australia now, and her goal is to get to Toronto to work for a financial services firm and maybe go to University of Toronto, I think. You wrote, hi everyone, hope all is well. Hi Chris, I was wondering if it'd be okay if I could jump on Zoom a bit later to ask you about the courses I should choose at the University of Toronto, please. Thank you. Yeah, absolutely. I'd be happy to do so. If you want, reach out to Venkat, who's one of my friends that went to U of T, is now a portfolio manager in Toronto, and I shared her LinkedIn profile with you last week. What I'll do is I'll open up Zoom towards the end of this call, and please jump on. I'm happy to help as much as I possibly can, and thank you. All right, next up we got M&M, who wrote, good morning, mentor, good morning. Salesforce is letting 8,000 employees go. Yeah. Activist investors say wellness culture versus performance culture to be back. What are your thoughts on a career? Is it cyclical? Yeah. So what's happening with Salesforce is it was a wonderful growth company for a long time. Mark Benioff founded the company after he left Oracle in 1999, and Salesforce.com is the largest employer here in San Francisco. The problem is cloud software, which is what Salesforce is, it's now cyclical. Okay, so anytime you get a really, really big company growing a lot, eventually you'll get to the law of large numbers and you can't really grow as much. And that's why the United States economy, which is large, the biggest in the world at $23 trillion per year, that's why the United States GDP, which is kind of like revenue for the economy, will never grow more than a couple of percent. And so what's happening with Salesforce is it's a little bit less of a growth stock. And so activist investors like the Elliots of the world will get involved to try to help margins grow. Okay, so when you can't grow as much anymore, you focus on cutting expenses, hence the headcount reduction, and you focus on growing earnings. And that's what's happening right now. Now, Salesforce released earnings last night. The stock is up, I think, about 10 to 15%. It was pre-market at least, because investors are excited that, hey, they're cutting expenses now to the extent that earnings are going to go up. In terms of a career in software, it is more cyclical now, just given the fact it's a much more mature market. But I think it's an excellent place to work in. My company is basically a software company online here with decent margins, humbly. And I think that if you think 5 to 10 years from now, what companies to join, I would look for the ones where software is not entered that market yet. And there's a great venture capitalist called Mark Andreessen, who I've met before. We were on the board of the same company years ago. And he started a company called Andreessen Horowitz. I want you to follow him. Okay. He talks about how software is eating the world. And I want you to pay particular attention to what sectors he talks about that have not been disintermediated or disrupted by software yet. Yeah. He's a wicked smart guy too, Mark Andreessen. Yeah. Okay. Next up, question is, I need 3 recommendations for my application. I've got a professor emeritus in statistics to support me. I was wondering if you could write one as my professor, please. Absolutely, Jenny. And so if anybody wants, you can go to Jenny's LinkedIn profile and check out a recommendation I wrote for her. She was in my Platinum MBA degree program. It'll be my pleasure. Okay, Manas, how are you? Good morning to you as well. Great to see you. Manas is from India. He's been with us for over 100 of these weekly calls. And we're almost at our 5-year anniversary of these calls now. Okay. All right. Next up, what would you say is the best way for me to position myself to become a teaching assistant at the University of Toronto? Yeah, I'll answer that generically to apply to everybody. So whenever you see an opening online for a job, your chances of getting that job are literally 1 in 250. And ultimately, the person that gets that job is the person that knows somebody at the company. So what I want you to do is use the concepts taught in my networking book on my website and in the MBA degree program. And I want you to network a lot and meet people that work at the firms you want to work at. Network with them aggressively as well. Just do informational meetings. And then towards the end of these informational meetings, very kindly say, thank you very much for your time. I enjoyed our conversation. Can you please let me know if there's any openings in the company? And if not today, just please let me know in the future, etc. Okay. And there's a lot more steps to that as well from a networking perspective that we discuss in the MBA degree program in a lot of detail. Okay. Trying out a new microphone up here. I don't think I like it as much as the old one. Yeah. Okay. All right. Next up. Okay, another question about Salesforce, this time from M&M, who wrote, Salesforce reportedly has been paying Matthew McConaughey more than $10 million a year, 8,000 employees let go, interesting times. Yeah, so Matthew McConaughey, he's kind of got that laid-back type mentality and outlook on life commensurate with Mark Benioff, who wears a Hawaiian t-shirt to a lot of events, Ohana. But Matthew McConaughey is not just doing advertising for them. He's also offering them guidance as well as consulting services. He's a wicked smart guy. Yeah. And I wish he ran for president. Okay. Next up, Manas wrote, can you please introduce me to your CMO? Maybe we could work on something in the near future if you don't mind, please. Yeah. She is really jammed. If you have specific questions for her, I'm very happy to answer questions for you. Yeah, thank you, and God bless you. I love you, and thank you for those emojis. Namaste, and God bless you. Okay. Moving on to next question, which is, where are we going now? Like, is it a recession or a bull trap? What is happening with stocks are rising, and now you got falling interest rates are higher than ever, and probably going to be more. Yeah. So no, interest rates are still rising. So the market is up a bit today. This week, or this year, I should say, a little bit in the United States, only because it got absolutely slaughtered last year. And the European markets have massively outperformed the American markets, because in Europe, what's happening is they have a little bit more of a reliance on China when it comes to the market cap of a lot of the stocks in the European markets like LVMH. And China is opening up again now, and they're starting to see torrid growth. Mind you, it's easy year-over-year comparisons. And so companies like LVMH and luxury goods companies are doing extraordinarily well in China. And LVMH, which is a massive market cap company, has like doubled or tripled this year. It's unbelievable. And I think Bernard Arnault, now the founder, is the wealthiest person in the world. Interest rates are going to continue to go up. Okay. But the Federal Reserve, what they did was last year, they raised interest rates by about 0.75% every month. Then they went to 0.5%. And now they're back at 0.25%. The problem is, though, unemployment is falling still, right? That's a problem, because the biggest input into the price of anything is labor. So it's a bit of a conundrum. But historically, if you look at the yield curve, whenever you have rates today that are higher than the 30-year rates, which is what we see right now, the inverted yield curve, that means a recession is coming. Yeah. That's not the case where you are, though, in India, where rates, it's a little bit different. They don't have the 30-year in India, they have the 10-year. And short-term rates are actually lower than the 10-year in India, which might imply that a recession is not coming in India. Now, India is doing a lot more trade with Russia. In fact, import and export volume between India and China, or pardon me, India and Russia, has increased 400% year over year. Yeah. Okay. Next up, Prashant. Hey, Prashant, how are you, man? It's been a while. I hope you're doing well. I miss you. Prashant wrote, hi, Chris. Hope all is well. I'll be joining Silver session from next week onwards due to health issues. I hope you're okay. If you could suggest a topic on project feasibility study to start with. Absolutely, yeah. And so in my Silver MBA program every Thursday from 10 a.m., that's in an hour and 10 minutes, from 10 a.m. till 11 a.m., I do a 1-hour Zoom call with my Silver students. I'm looking forward to getting to know you as well. Thank you, and humbly helping. And I hope you feel better. Okay, moving on to Abel. Wrote, hey, Chris, hope all is well. Likewise. Can you please go over how to create an exception system in an Excel spreadsheet? Yeah, you asked about this last week, and I gave you 1 or 2 lines of code with it. If you want, what you can do is, if you're in the Silver, Gold, or Platinum MBA program, we can go over that during office hours. Yeah, thank you. Okay. All right. Next up, Manas wrote, what about the global market and oil? Trump is complaining about the administration's policies. And do you think Trump will be in office again in 2024? Will it be good or maybe, yeah. So I don't know right now. It looks like Ron DeSantis might win the Republican nomination. I just don't know. I can't make that call. But regardless of anybody's politics, usually what happens is when somebody is running for president, and they're not president now, but they're running for president, they complain about how awful things are. Yeah. And I don't think things are as bad as people are saying. Okay. Okay. Next up, is it Ake wrote, I want to start a clothing brand. Cool. Can you give me a quick roadmap of how to start it and how to network in this niche? Yeah, absolutely. Yeah. So I have a student of mine who started a clothing line a couple of years ago called Grizzy Wear. Okay. Right here. Here's the company right here. Okay. And that's his son, actually. And he sells it. He's Bulgarian. So he has a Bulgarian website and English website as well. If you want, what you can do is you can send me a message at support@harounventures.com, and I'll introduce you to my student that started this company. Yeah, but it's hard for me to tell you right away what to do because there's so many steps, and I don't want you to start any company, clothing company, or any company at all without writing a full business plan. Okay, because failing to plan is plan to fail. In fact, I don't want you to even think about starting until you build out the financial statements as well. Because without data, it's a theory or thesis and nothing more. And in my MBA program in the third semester in the Venture Capital Bootcamp, I teach you a lot about how to start a company as well as networking so you can raise capital, etc. Yeah, but never start a company until you write a full business plan, and that's something I humbly help my students with. Yeah. Okay. And be careful because margins are razor thin in that business. It can be tough. It's all about the brand. Yeah. Okay. All right. Next up, Arsh wrote here. Hold on one second, guys. Sorry. It jumps on me sometimes. Boy. Here we go. Okay. Arsh wrote, how can I get an internship at a hedge fund without going to a target school? I'm in my first year of university in the United Kingdom. Yeah. So I've seen a lot of people work at hedge funds that didn't have Ivy League degrees. And the way they do it is they network like crazy, and they send a lot of investment write-ups directly to portfolio managers. And in my MBA program, I teach you how to create one-page write-ups for mutual funds and hedge funds and different types of jobs to bring with you to your informational meetings. Now, what you do is you put that one-pager on the back of your resume when you meet with the people at those firms. And quite often, like these hedge funds are very secretive, right? A lot of times you don't know when they're hiring. So what you have to do is network with people that work at those hedge funds. And you might have to start in the back office as well, meaning helping out with settlement of trades, etc., or operations before you move up to an analyst role. Yeah. And if you want, what you can do is today during Zoom, which I'll turn on soon, I guess, you can ask me questions and show me your LinkedIn profile. I can tell you exactly what to do in terms of optimizing your LinkedIn profile and how to network as well to meet with people that work at hedge funds. Yeah. Okay. All right. Next up, we have Renveer, who's from Mauritius. He's in my Silver MBA program. Renveer is amazing because what he did was this. He went to a shareholder meeting 2 weeks ago in Mauritius. He wore his best suit. And he introduced himself to the CEO, and he's having coffee with the CEO as well now. And the best way to meet with CEOs is to go to shareholder meetings. Anybody can do it. Renveer, you inspire me, buddy. And so if anybody wants to get a job at a company or customers at a company, it's always great to go right to the top. You can do so at shareholder meetings because when you go to these shareholder meetings, what happens is the CEO is there, of course, and all the C-level executives and some of the board members and a bunch of investors. And usually the CEO does not leave until everybody in the room is left. So you can corner the CEO and talk to her or him about whatever product it is you want to sell or job you want to get there. And they're not going to you're not going to say no because everybody is watching, including board members and investors. And so what you do is you ask them, for a follow-up after that, say, nice to meet you, thanks for the conversation. Do you have time for a quick coffee? Or is there somebody in your company you can recommend where I might be able to talk about selling my product or getting a job with? And that might provide you with the name of a person, right? You got to ask. Now, last year I had a student in my Platinum MBA program that grew up in the ghetto. And he told me he learned one valuable lesson in the ghetto, which is this. Open or closed mouths don't get fed. You have to ask. Ask and you'll receive. It's prophetic and it's been true since the beginning of time. Yeah. Okay. So Renveer wrote, what's the best way to study in university? Yeah. So I always recommend studying first thing in the morning. Okay. And it doesn't matter if you're in university or you're at a company. If you have something really important, the first hour is always the most productive, right? And working and trying to cram at night is a waste of time because 10 hours at night is the equivalent of 1 hour in the morning. So here's a biohack I use so I can accomplish 10 times more every single day. So what I do here in my office is I get 20,000 steps every day here on my treadmill. I can share the treadmill brand with you as well. It's the cheapest treadmill you can buy because there's no bars on the side. And so what I do is I walk all day long on this treadmill. Now, the fastest it will go is 6 miles per hour. So I usually walk at 6 miles per hour all day long as I'm working. And I've got one of these, it's a little bit loud. I got to put WD-40 on the wheels. But what I do is I also have this desk that goes up, and I type this way because my posture is getting worse. I'm trying to improve my posture. And when I do this, I feel like I just woke up all day long because you're giving your heart and your brain oxygen. And so it's a biohack to trick your brain to think that you just woke up. Okay. Crazy professor I am. All right, I'm going to stop the squeakiness now. Yeah. But I highly recommend this. I have lots of friends that have gotten this based on my advice. And it's helped to take their career to the next level because you're much more productive every single day. Okay. All right. Okay, next up, Manas wrote, how are crypto markets performing? People predict Bitcoin's going to hit $500,000 next year. It won't because of halving, but will be possible with higher interest rates. Yeah, usually when interest rates rise materially, what happens is speculative asset classes underperform. And the reason is because if we go back to the early 1980s, during the Carter administration, and God bless Jimmy Carter, I'm praying for him. I hope he's okay. And I've got a book here. I met Jimmy Carter, actually, and he signed one of my books. Good guy. But during the Carter administration, back in the early 1980s, interest rates were about 20%. And the reason is because inflation was high. And when interest rates were about 20%, there was hardly any IPOs. Nobody wanted to invest in stocks either. The stock markets did terribly. Real estate did terribly. And all speculative asset classes did poorly as well. So if interest rates are going to rise a lot, it's deadly for speculative investments. I do own Bitcoin. I publicly disclose that. I'm never selling it. But when was the last time you heard somebody mention NFTs? As interest rates rise, speculative investment classes go down. And only certain types of investments do well, like gold, for example. And this here is a prop from a course I'm working on releasing for my MBA students soon. Which is, it's going to teach you everything about macroeconomics. And as you guys know, I love to teach with props. Okay. So there's two medicines, and this is going to be in that course. There's two medicines that the government uses to fix the economy. One is called fiscal policy, and the other one is called monetary policy. And earlier today, somebody asked about interest rates, which is monetary policy. Okay. All right, next up, Caroline, who's from France but lives in Ontario. She's one of my silver students. She's great. Wrote, hey, Chris, to answer your question, I do enjoy, the lecture at the beginning of the webcast. Thanks for your weekly input. I appreciate that. Yeah, it's something new I'm trying. I always try to experiment and push the goalpost out, as I say in Canada. If anybody does not want me to do the segment at the beginning where I teach for like 20 minutes or so, please let me know. If you guys are the customer, the student, and the customer is always right. So if you don't want me to start with a lecture on these weekly webcasts, let me know, please. Thank you. And if it's helpful, if you did like it, then click the like button as well. Thanks. Okay. Moving on to Kyle, who wrote, good morning, Chris. Good morning. I'm taking your financial analyst program. Thank you. Is the DCF Excel sheet able to use for regular stocks or just a case study? And how would you go about doing analysis on them? Yeah, no, it absolutely can be used in the real world. In fact, all the tools I create for you are ones that I used when I worked at hedge funds as well as venture capital firms and when I worked at Goldman Sachs. So you can absolutely do that, yeah. In terms of doing an analysis on the companies, in my MBA program, I provide you with all the tools that you need in order to be a better investor or take your career or business to the next level. So I've got one particular tool in the MBA program, which is a 100-step process for investing based on fundamentals, valuations, and a little bit of technical analysis. Yeah. Okay. And you can learn more about that at harounmba.com. 30-day money-back guarantee always. Okay. All right, and here's where people were answering about this video game. Atari is correct. Remember, I asked not only the name of the company, but also a little bit of fluff there, also which desert they buried hundreds of thousands of these things. The answer is New Mexico. So let's see who got that right. Okay, so Manas wrote Atari as well. HC wrote Atari. Aha, Ake wrote Atari in New Mexico. Congratulations. Our winner is Ake, who's the first person to mention it. Ake, please email support@harounventures.com, and I'll give you my silver MBA degree program for free. And congratulations. Yeah. But dude, it was such a disaster with ET. And Steven Spielberg blessed the game too. Everybody thought it was going to be a home run at 82 or 83. And so Atari released this game. I got it for Christmas when I was a kid. I am that old. And I was so excited. And I said, thank you, Dad. And I played the game. I was like, I can't believe how awful this is. It was so bad. They made so many of these things. They couldn't sell them. They had to bury them in New Mexico in the desert. And it caused basically the entire video game industry to go bankrupt in the United States. In fact, video game sales were down 90% year over year in the early 80s. And it wasn't until 84 or 85 until Nintendo came along with the Super NES, or the NES at first, in order to rescue the entire industry. Yeah. We do a case study on Nintendo in my MBA program. Okay. All right. Gary, how are you? Gary is one of my students in my program that started last September, and I'm starting a new MBA program it's going to be May 1st. And to learn more about that, you go to harounmba.com, and then up here, go to FAQs, and then you can read all about the program. Yeah. So this will be our 7th one-year MBA program for gold and platinum. Spots are going to be limited. It's going to be a smaller class. You can check it out and learn more there if you want. Thanks. Okay. So Gary, who's a former investment banker that lives in Georgia, great guy, excellent communicator. He used to teach also in China. Good dude. And he's a CPA. Yeah. So Gary wrote, good morning, Chris. According to the Wall Street Journal, the SEC is questioning companies' non-GAAP calculations and disclosures. Yeah. Lift and sleep number were called as misleading. What are your thoughts? Yeah. So I don't think it's misleading if you provide both financial statements. Like if you provide, sorry, let me go back to full mode here. Yeah. I don't think it's misleading if you provide GAAP and non-GAAP financials. But you've got to list a lot of footnotes. And as I showed you earlier today, when we looked at Oracle's Q2 income statement, they provided GAAP and non-GAAP. And in the reconciliation table, they also provided 4 footnotes to talk about amortization, stock-based compensation, etc. You have to disclose all this stuff. Yeah. Okay. And then moving on to Manas, who wrote, people are dumping BUSD, Binance stablecoin. They dumped $6 billion in a few hours. Is it the end of Binance USD? Because even Coinbase delisted them from their exchanges. What are your thoughts, if any? Yeah, I'm not a fan. I publicly disclose I own 4 cryptocurrencies in size. I own 4 cryptocurrencies, and I keep them in my cold storage wallet, as I mentioned earlier today, not my hot storage wallet. Okay, and those 4 are as follows. Okay, and I'm not telling you to buy or sell these things, and the caveat is 95% of all cryptos are a scam. But I own a Bitcoin, Ethereum, which I stopped mining for obvious reasons recently, as well as Litecoin and Ripple. And the founder of Ripple lives not too far away from me. Yeah. Okay. Moving on to Pramod, who wrote, hey, Chris, I'm from India. Awesome. We have here facing problems on pension funds. All the schemes lose value, even though our markets have tripled from the start of the fund on 2004. Yeah, I'm not familiar with that. Maybe a lot of the pension funds are underfunded or not as regulated as they should be by the government. Now, most people, younger people especially, they don't really know what a pension is, right? Or they don't really focus on it, because if a lot of people are going to have many jobs throughout their entire lives and side hustles, then pension is kind of a moot point. Yeah. Susan, how are you from St. Louis? Good to see you. Okay. Pulasli wrote, hey, Chris, how are you? I'm always great. Thanks, especially during these weekly calls. Next up, Joshua wrote, and Joshua's new. First time I've seen you. I hope you join us again. Thank you. Joshua wrote, I love your channel, Chris. Found you a couple weeks ago. Thank you. I appreciate that. Yeah. And what we're going to be doing is we're going to start releasing more of our vlogs on the TV show Billions. So it's probably one of the best performing vlogs I had. It's called Wall Street Pro, humbly, reacts to Billions. And I did one also for The Wolf of Wall Street and the movie Wall Street. Yeah. So Joshua wrote, I hope you make more episodes reviewing billions. It's the best. Thank you. Next week will come our second one. Yeah. And then we're going to be more consistent as well. Yeah. Next up, we have Satans, who's Mark, who graduated from my MBA program, I think 2 years ago. He's from Michigan. Great guy. He's brilliant. Love him. Mark wrote, hey, brother. Hey. The company split the penny stock that you were talking about the other day. Be careful with this. Yeah. From 0.0007 on March 1st, I was told that over 150,000 was given by one person and no paperwork has been seen. Yeah, careful with that. Yeah, yeah. And if you want, you can watch my vlog on the Wolf of Wall Street, where I talk about OTC and penny stocks in a lot of detail and how they can really be a scam. Please be careful. Yeah. Okay. Moving on to Kyle, who wrote, will I be able to put my degree from your school on my resume? Absolutely. Absolutely. A lot of people do it. I will never make this an accredited program, though, because traditional universities, MBA schools in particular, they don't teach you the most important concepts to make you successful. You know, traditional MBA schools don't teach you how to present. They don't teach you how to manage your own money. They teach you how to manage other people's money. They don't teach you how to start a company. Ask anybody that's got an MBA. So do you know how to start a company now? They don't teach you how to get customers. They don't teach you how to network. And these are, or how to present, these are fundamental skills that you need to be taught. And it's the essence of what I do. And the reason that I teach is because of this, this book that I wrote called 101 Crucial Lessons they don't teach you in business school. And I wrote this back in 2015 in Forbes, humbly. Forbes called it one of 6 books that every entrepreneur needs to read right now, along with Peter Thiel's book, Simon Sinek's Good to Great, and all that stuff. And by the way, Obama's publisher of his books reached out to me to try to publish this as well. I almost did it. I decided not to because they would own all of the intellectual property for it and they would drive up prices. And I don't want anybody to tell me what I can and can't do. Back to accreditation. If I did an accredited MBA program, I wouldn't be able to accept certain people. And also, most importantly, to be accredited, you're regulated by governments that will tell you what to teach. And I'm not going to teach bogus theory that's not going to help you with your career. Everything I teach is actionable. You can put in action immediately. I provide you with all the tools and templates you need in the program to take your business or career to the next level. And there's a 30-day, 100% money back guarantee, and it's always up to date. I even teach you how to program. I also added how to use every feature in Excel as well to my MBA program. And I'll do this real quick. If you're currently a student in my MBA program, if you go to my website, harounmba.com, if you click up here on Power Search, which is where you can search the curriculum in a lot of detail, you can click on any of these links here for the MBA you registered for to get access to the Excel stuff I just added. I've been using Excel for decades. And you can even search here. So if you want to search on a certain topic, you hit enter. And I outsource this for $120 a month to a company called 360 Site Search in Germany. So for example, beta, you select the program you registered for, and you can scroll down and click to get immediate access to lectures on any topic for that matter. Yeah. Okay. All right, moving on to Ake, who won my silver MBA degree program for correctly mentioning which desert, which state these things are buried in. Ake wrote, Chris, is Sarthik from a different account? I recommend watching a video from Kevin Hart where he talks about the opportunity given to be taken seriously. I can relate a lot with his statement. I don't know what that means. I'm so sorry. Let me know what you mean by Sarthik. I know who Kevin Hart is. He's a funny guy. Yeah. Okay, and he's best friends with The Rock. Ake wrote, when opportunities were given to me, I didn't bother. When I realized they were already gone, I felt suicidal. Oh boy, that time. But then I found your courses on Udemy about crypto and gave me a reason in life. Oh, God bless you. I'm so glad you won the silver MBA today. I want to help you. So when you email me, support at harounventures.com. Instead of silver, I'm going to give you platinum. Okay. And we're going to start doing one-on-one calls together. Okay. I'm going to help you. Yeah. For free. Platinum for free. Thank you. God bless you. Yeah. Yeah. If anybody has, stress issues in general, there's nothing wrong with, like, we call in sick at work when we're physically not well. But when you're mentally not well, it's cool to do the same thing. And I used to do that as well. I worked at Goldman years ago. I used to take 1 or 2 days off every 6 months when mentally I just was stressed out. There's nothing wrong with that. Yeah. I'm here to help you, brother. I love you. Okay, and Ake wrote, I started reading David Goggins, who also motivated me to live. Thank you, Chris, for having me. You're most welcome, man. You're most welcome. Yeah. And for me, and look, I do go through, and I'm transparent. Transparency builds trust, as you guys all know. But I have had depression issues in my life. And the way that I work through it is I exercise a lot. Okay. And that's why one of the reasons I use my treadmill a lot here and I exercise every single day is because it releases serotonin. Right. And nobody's ever gone to the gym and afterwards told themselves, God, I wish I didn't go to the gym today. So I would do that. The second thing I'd focus on to beat depression, and of course, talk to a doctor, not just me, is I would take off 1 day a week. And there's a reason why God created the world in 7 days. For 6 days, he rested on the seventh. He didn't have to rest. But the basis of all wonderful religions, like Christianity, Judaism, Islam as well, you take off Sunday, Friday, and Saturday, respectively. 1 day off a week. So schedule that 1 day off a week, please. It's really, really important. Another thing that helps me also dealing with stress in life, and this is just me, is I always tell myself, God already knows what's going to happen. And that gives me peace of mind. And Winston Churchill once said, I once met a man on his deathbed who talked about all the worries he had in his life, none of which came true. Things are not as bad as we think. Yeah. And I want you to read a great book by Dale Carnegie called How to Stop Worrying and Start Living. And he talks about how to live in day-tight compartments and just be happy and focus on every day. Don't worry about the past. You can't control it. Don't worry too much about the future. A lot of it's out of your hands. Yeah. Yeah. Don't worry. Yeah. And Dale Carnegie, last thing I'll say in this, he had this wonderful quote. He said, it's work stress is all created in our minds. So it's all, we create all of this self-doubt. And the biggest enemy we have is quite often us. And so you got to be like the Rodin sculpture, I think, therefore I am. Just tell yourself that you're things are much better than you think. Set up those meetings with me as well through the Platinum program. I want to humbly help you. Thank you. And God bless you. Okay, next up, Kyle wrote, what are your thoughts on a multi-regressional model versus a DCF model? Yeah. So what I'll say in general is be really careful with DCF because there's so many independent variables. I'm not a big fan of DCF. If I tell you that x plus 1 is 3, what is x? It's 2. If I tell you x plus 1 plus y plus Coke bottle is 7, what is x? We don't know. Yeah, so be careful of that. I do like looking at data analysis with respect to regression. It definitely helps a lot, especially when you look at behavioral finance, when you're trying to decipher which CEOs or founders of companies have bought shares or sold shares in their company, and what does that do to the stock price. So, for example, Elon Musk, who's very unemotional and a great business person because of that. In March of 2020, when we were at the peak of the pandemic and stocks were crashing, he backed up the truck and bought a ton of shares in Tesla, a ton of shares. And of course, the stock went up a lot. Then he sold those shares 6 weeks before the peak in the market in the fall of 2021. But you can use regression analysis to analyze that sort of thing. Okay. Next up, Kyle wrote, can you briefly talk about what's in your Platinum program and when the program is open for new members? And do you go more in depth in DCF models? Yes. And valuation than you do in your Udemy course? Absolutely, yeah. So I have a course on Udemy, and Udemy is a great partner of mine for my indirect distribution. It's called an entire MBA in one course. It's 7.5 hours. My MBA degree program is 300, actually it's probably 400 hours now. You don't have to watch all lectures, but let me show you really quickly. All right, so what you do is you go to harounmba.com, and then you go, let me start from here. Then you click here on MBA degree FAQ, okay? And you can read a lot more about the MBA degree program here. And let me just get my face off in the corner. Sounds like a Canadian hockey term. What you can do is you can just scroll through to learn more about the program. So Silver, you can start today. It's like Netflix. It's on demand. And anytime I release new content, you guys get it for free in all of these programs. Okay, it's several hundred hours. In order to pass, there's 100 short quizzes, and all you have to do is get over 50% on half of them. Okay, and I set it up that way because it's not fair that everybody take all the content, because I don't know if people are interested in only finance or only starting a company or getting a job, whatever. Okay, so you can read more about it here. Okay, there's also a payment plan. I think we have $99 a month for 5 months or something, or 6 months now. And we have payment plans now for gold and platinum, given the tough global economy for a lot of people. So gold is just like silver, except I teach the classes live, and I take questions, and I do Zoom. And so for gold, the next program, this is our 7th one-year program. This will start on May 1st, okay? It's 1 year long, and it's going to be every Monday and Tuesday from 9 a.m. until noon my time. You don't have to watch all the classes either, okay? Platinum is the same thing as gold, except it also has 9 one-on-one meetings with me, which is something that Ake just won for free. Yeah. And then positions are going to be limited. It's going to be a smaller class this time as well. Yeah. So again, go to HarounMBA.com and then just go up here to learn more. Yeah. Okay. Let me go back over here. Okay. And then, hey, Paul, how are you? Paul's in my platinum program. He started out taking my courses years ago, and I actually met him during the summer of 2018 when I was in, or 2019, when I was in Barcelona, and he gave me that wonderful Qatar shirt as well that you have seen me wear before. So Paul Brow wrote here, he's in my platinum this year. Hi, Chris, top of the morning. Good to see you as well. What do you think about Tesla and the EV industry in general? Have you used one? Would you recommend it? Yeah, so I'm a huge fan. I've had solar on my roof for years. We own a Tesla as well. I do like the car. However, I don't think it's as intuitive as people think. It's kind of dangerous too with self-driving. I don't trust my car for that. It's kind of a scam the way they've marketed it as well. Also, I'm not a big fan of the dashboard system. I can never figure out how to change my side mirrors. It's a little bit tricky, yeah. But I do like the fact that we don't have to go to the gas station to fill it up that often. Now, Tesla just had an analyst day yesterday, and Elon Musk mentioned how he wants to spend an additional $150 billion to make sure that they can make 20 million cars per year instead of 1.2 million per year, right? And so it does worry me from a dilution perspective, but I'm a fan of Elon business-wise. And also of his company longer term. Yeah, yeah. And I always take a step back too. I always ask myself, in 5 years, will this company or sector be more relevant than it is today? And I think EV is going to be much more relevant in 5 years, of course. Yeah. Okay. But the EV companies that I don't like to invest in are the ones where there's too much in terms of government subsidies. For example, solar, and I do have solar and I love it, and I'm an environmentalist too. But solar stocks did incredibly well. I remember I participated in FSLR for solar in the IPO back in 2007. But those stocks got crushed in 2008 because what happened was, of course, the global economy had issues. We were within 24 hours of bank machines not working. But also what happened was, countries like Spain, where you're from, which was I think the second or third biggest solar market in the world, they got rid of most subsidies for solar, which caused solar stocks to crash. And so I love investing in companies that can stand on their own 2 feet without much government help. Last thing I'll say on this is there's a brilliant economist and Harvard Business School teacher named Michael Porter. And he wrote this great book called Can Japan Compete? And he basically stipulated that, after World War II, the Japanese economy, for obvious reasons, was in shambles. And what happened was the Japanese government set up incentive programs and gave away tons of money to every single sector in the economy to rebuild, except for 2 sectors, autos and consumer electronics. And of course, those are the 2 sectors that Japan does incredibly well in. And so the bottom line is with too much government, too many government incentives, it doesn't always help a company. I believe in Darwinism, kind of like giving a kid, too much in terms of allowance every week. They got to stand on their own 2 feet. Yeah. And I do believe Japan can compete. And it breaks my heart what's happening in Japan now. Japan's population is 80 million now, and it's going to go down to, it's 130 million now, and it's going to go down to 80 million by 2050. Yeah, it's really sad. Okay. Next up, we have Keith. Hey, Keith. Keith wrote, hey, Professor. Hello from Barcelona. Good to see you as well. Keith, please connect with Paul Brau. Paul's last name is Brau, and set up a coffee with him, man, in Barcelona. And then you wrote here, have you read the book Think Fast and Slow by Daniel Kahneman? If not, I recommend it. My wife gave it to me. And then you wrote, see you in San Francisco. Thank you. I'll take a screen print of that, actually, and I will check out that book. Thank you. Thank you. I'm looking forward to meeting you, man. Yeah, for sure. And I hope Paul can make it as well. So on August 12th and 13th this year, that's a Saturday and Sunday, I'm holding my annual graduation and networking event for all of my gold and platinum MBA students. You don't have to graduate in order to attend. And I'm going to be doing one-on-ones with all my platinum students there as well, half-hour increments, and breakfast, lunch, and dinner on me. And I'm renting a great museum again. Yeah, and thank you so much, Christina Hong, our fearless leader, for helping out with that as well. Yeah. Looking forward to meeting you. Okay. Next up, Shavanth wrote, good evening, Chris. Hey, I want my friend graduated from finance major, but he gets headaches from just seeing a lot of Excel number, and now he is confused what career to choose. Yeah. Yeah, if it feels like work, it's not the right career for anybody. You have to be passionate about it, especially in programming. Like, people love to code. I love to code. I'm a geek. But I don't recommend anybody go into the technology sector if they don't love it. Because if you're passionate about something, you'll do incredibly well. But if you chase money, you lose money and your dreams. But if you chase your dreams and you don't care about money, and you don't care if you fail, then something wonderful happens. In the long run, your dreams come true and the money follows accidentally. It always does. Yeah. All right. All right, next up, Kyle wrote, do you think the United States will overregulate and destroy crypto? A lot of the regulators sound like they don't know anything about what they're regulating, and they don't want to listen, which I think will hurt the industry. Yeah. So I believe in small government. I'm a bit more of a libertarian. I was a big fan of Ronald Reagan growing up as well, who wanted small government. But I think governments serve a noble intentions for the people, to the extent that they can help, investors not get scammed. Like, after the stock market crash in 1929, the SEC was created. Okay, and the SEC makes all companies that want to do an IPO write a very, very detailed investment offering memorandum. Okay, and called an S1. This is Facebook's S1, or Investor Offering Memorandum, from 2012. So now that we've had a big crisis in cryptos and people have lost billions, I think you need to have regulation. And I'm glad the SEC is going to be regulating cryptos as well, because it's not fair how much people get scammed. And FTX, what they did, crooked, is they spent about $100 million in advertising and lobbying government officials to make sure that cryptocurrencies are regulated by the Commodities Exchange and not the SEC. And what FTX also did in order to get investor trust is they sponsored all the umpires in Major League Baseball. And so that all the umpires, and you saw it during the World Series last year, they all had FTX on their jerseys, right? To plant that seed that, hey, regulators and the ethical rule makers they love our company. Now, obviously, that didn't work out well for Sam Bankman-Fried, who I think is living with his parents at Stanford now, where his parents are professors. Yeah, but I think that regulation is a wonderful thing. I think it's going to protect all of us. I don't think there's going to be overregulation. In fact, I think regulation will help cryptocurrencies go up in the long run, because the alternative to regulation is to make them illegal. In a lot of countries that are more left-wing, okay, communist countries, etc., they've made cryptos basically illegal. But if more right-wing or capitalist countries, I'm a capitalist, of course, If they regulate cryptos, it means they're not going to make them illegal, which is a positive thing. Yeah. Makes them more legit. Yeah. Okay. And Yav from Colorado, who's in my MBA program. Good to see you as well. How are you? Okay. Next up, we've got Omar. And there's a ton more questions here. What I'm going to do right now is, if you guys want to join Zoom, and I'll open it up right now, what you can do, and I'll still take questions from YouTube Live here. But what you do is you go to this web address here, harounmba.com/Zoom, all lowercase, okay? And at harounmba.com/Zoom, all lowercase, you can click on this link here to join Zoom, okay? And I can take questions over Zoom this way as well. Give me a second to launch it here. And as this is launching, I will answer more questions here. All right, here we go. Good. And I'll turn this off for now, but I'll look to see if people want to join in a second. Okay. All right, next up, we've got Omar, who wrote, if you were a salesperson working for a fintech SaaS company, financial technology software as a service company, meaning cloud-based software for finance companies, how would you sell the SaaS for other businesses to increase revenue in a relatively short period of time, like 3 to 6 months? I love that question, Omar. So my answer is going to be generic enough as always to apply to everybody. I recommend going to shareholder meetings, kind of like Ren Veer, one of my students here from Mauritius in my Silver MBA program, has done so. Go to shareholder meetings, okay, and go and meet the CEO and talk to the CEO, okay? And ask the CEO if their company has any interest in cloud-based software. And the CEO might say, well, maybe talk to our CTO. And then ask, well, what's your CTO's name? And they might say, I don't know, Albert Johnson. And then what you do is you send an email to albert.johnson@companyname.com. And you say, I met with your CEO today. He suggested I can reach out to you and talk about my software company. Please let me know if you have time for a coffee or a Zoom call. And if the email albert.johnson@theircompanyname.com bounces, then try ajohnson@companyname.com. Rinse, lather, repeat until the email doesn't bounce. Or contact them over LinkedIn directly through an email. And if that does not work for you, please let me know. But it should work, yeah. Okay. And also my MBA program, I teach you how to sell in a lot of detail. And I even have a course on it called Sales 101, how to sell anything. Okay, next up, Ted. Hey, Ted. Ted wrote, hey, Chris, with wonderful students like Ginny, Manas, Vital, Rose, and Rubina. Yeah, awesome, yeah. And Vital was my platinum student from Rwanda. And we built a school. I used the profits from my program to give away scholarships and to build schools in Africa. And actually this summer, what I'm doing in, I think it's July, I'm going to be in Rwanda at our school, and I'm going to be doing this weekly webcast from that school as well, one week. Yeah, we do have great students. Yeah. You wrote, with great students, like the ones you mentioned, it's no wonder that you enjoy teaching. I do, thank you. Good karma and blessings to you, my friend, likewise. God bless you. And when one teaches, two learn. Yeah. Okay, Omar wrote, you look great as always, thank you. Where do you buy your suits from? Thank you for this amazing live stream. Thanks so much, I appreciate that. So this one here, this is it's a Xenia, but I buy it from a place called Sam Malouf on Burlingame Avenue here in where I live. Yeah. Okay. Yeah. But by the way, a really good Zoom-based setup at home for you can do the exact same thing for your career that a wonderful Italian suit can do as well, probably more so. And in my MBA program, we also teach you, based on the equipment you have, how to create an incredible audio and video-based experience at home for Zoom. And it's in the 4th semester. And for those of my gold and platinum program, I actually have my chief creative officer, Matt Lacuse, come on the call to help all of you individually. Yeah. Okay. Next up, Daniel from California wrote, good morning. Good morning. My job gives us a free Udemy subscription, and I found one of your courses. It was very insightful and inspiring to see how passionate you are. Thank you. I appreciate that. And God bless you. Udemy has a wonderful business called Udemy for Business. UFB, which is growing like crazy. Yeah, it's a subscription business model, which gives amazing revenue visibility for the company as well. And they're an important partner of mine, so thank you. Appreciate it. Okay, and let me see if anybody is on. Okay, so I've got a couple of people here. So I'll admit you guys into Zoom. You guys can't see it yet. And then I'll come back in a minute to answer questions if you guys have questions in Zoom. Thank you. Okay. All right. And give me 1 second, guys, please. Okay, next up, Kyle wrote, do you believe we'll have a hard or a soft landing? And if a soft landing occurs, do you believe we'll have a sideways market for years, if not a decade? Yeah, it's tough. So what Kyle's referring to is when the economy is not doing well, which is what happened during the pandemic, what happens is the government wants to improve the economy, and as we come out of that crisis, have a soft landing instead of a crash. And we were going to have a global soft landing, but in February of 2022, last year, Russia invaded Ukraine, which caused obviously oil prices to go up materially, which caused inflation. Yeah, so looks like we're having somewhat of a hard landing right now. I think it's going to be a hard landing. I do. I do think a recession is coming. The yield curve is inverted. In terms of will things trade sideways for a decade, I have no idea. No idea. But I'm always long-term focused. And Warren Buffett, whenever he buys stock, and he bought Coca-Cola shares in '88, and he said he's never selling it. It's now 8% of his fund. Whenever Buffett buys a stock, he always tells himself, I don't care if the market's closed for 10 years. Like, I'm going to be owning this thing forever. And the longer the view, the wiser the intention as well. So you got to think long-term. I don't know the path, but I know the destination of the stocks that I invest in, or I think I do. Always think long-term. Otherwise, you get fooled by randomness. Yeah. And if you're not sure where to put your money, I always recommend just putting it in ticker VOO, which is the S&P 500 index fund, which has ridiculously low fees as well. And the S&P historically, the S&P 500 is up 10.5% per month, historically. Yeah. All right. Next up, we have the Berlin, who's my MBA student last year from San Bernardino, Southern California. I hope to meet you in person in August. You wrote, hi, Chris. Good morning, brother. Hope all is well. Likewise. Always good to see you. Thank you. Okay, moving on to Andy, wrote, hello, sir. Chris, please. I really missed, I'm really inspired by you. Thank you. Appreciate it. I'm a teenager and I want to start up, but for now, I do not have the idea or money. What should I do now so I'm prepared to open a business when the time comes? Yeah, that's exactly like I was at your age as well. Yeah. Oof. So what I would do is whenever you come up with an idea, I want you to write a full business plan. I teach about this in my MBA degree program. And starting a business can be the most important decision of your life after getting married, whatever, and having kids. And starting a business without preparing, can ruin your family life, your health, your wealth, and everything. And it's amazing that people don't write a business plan first. So in my MBA degree program, in the venture capital boot camp in the 3rd semester, I teach you how to write a business plan. I give you a ton of templates as well. So that the probability of your company being successful is materially higher. And I never want my students to spend any money on a business until they write the entire business plan, including the financial statements, which I also teach in my MBA degree program. Yeah. Okay. Next up, Pulasti wrote, Chris, a different question. What is your definition of success? Yeah. For me, success is balance. Okay, it's not about how much money you make. And I despise how society tends to worship people like Elon Musk. Of course, he's done great things business-wise, but he's been married, I don't know how many times. He has so many kids with different people. It's just, for me, I respect somebody more so if they're well-balanced. Okay? And if they do their job to try to make the world a better place during their lifetime. We're always here to serve other people. Yeah. Okay. But I promise you, if like too many people make money, they're God, and that's one of the 10 commandments is not to have any false gods, which is the basis for so many great religions. If you worship money, you're never going to be happy because you'll never make enough. Okay. Next up, the Berlin wrote, Binance is in trouble. Yeah, it's scary, man, 'cause that's the largest cryptocurrency exchange in the world. And that's another reason why I believe, like I mentioned earlier today, that I don't want anybody to keep their cryptos in hot wallets, on Binance or Coinbase or anywhere. Keep them in cold storage wallets offline always. Yeah. And then you wrote, I believe Coinbase is not allowing withdrawals or transactions. What are your thoughts for crypto? Yeah. So as always, I'm very, very long-term focused. I've disclosed the 4 cryptos I own that I'm never selling, but I certainly do not hold them in hot wallets. Yeah. Okay. Next up, Kyle wrote, and by the way, if and when we do have cryptocurrency regulation, there might be FDIC insurance as well, like government insurance, kind of like we see with a lot of banks as well. And that will certainly alleviate anybody's concern about investing in that speculative asset class. Regulation's a good thing. Yeah. Okay, next up, let's see here. Michael wrote the lecture was excellent. Much appreciated. Thank you. I appreciate that. Thank you. Thank you. Yeah, again, if you guys don't want me to start this weekly call with a lecture, let me know, and I'll go right to Q&A. Yeah. Okay. All right, so let me go here. I've got a couple people waiting in Zoom. Okay, let's get a couple more, and then I'll open up Zoom as well. Okay. Next up, the Berlin wrote, Chris, my sister bought a home in Las Vegas for $295,000 at a 3.2% interest rate. It's a good rate, especially in this time. It's amazing, actually, because the 30-year is much higher than that. Then you wrote, I believe her payment is $1,300 to $1,400 a month, and she owes $245,000. Okay. Oh, wow. Okay, so she put, Alexa, what is 245 divided by 295?
245 divided by 295 is approximately 0.8305.
Okay, she put down 17%. Yeah, yeah. I usually try to feel comfortable putting down a little bit more so than that. Yeah. And then you wrote, she wants $100,000. She wants out and doesn't really like the city. So how do you see if it's a good deal, and what metric do you use? Yeah. So for me, the way I look at real estate, I own a bunch of places, especially in Southern Ontario and Canada. I own a couple of buildings there. What I always do is I look at my mortgage, right? And always have a mortgage for tax reasons, okay? Especially in the United States where you can write off the interest. Can't do that in Canada. But I look at the mortgage and I look at the rental payments, and I make sure that the rental payment is much more, of course, than the mortgage, and can service my debt as well. I would look at that. Yeah. Yeah. But these are, I hope she's locked in for 30 years at that 3.2% rate, which is a good rate. Yeah. Okay. Next up, Kyle wrote, NFTs will be used in the future, Art, in one form, yes. But I believe it'll be good for real estate, etc., for titles. But yes, Bitcoin is the best. What are your thoughts on it? I'll be old tech. It'll be old tech, and BTC won't be king. Yeah, I still think that Bitcoin is digital gold. This is a prop for my economic stuff I'm adding to my MBA program, including how to buy and sell bonds and value them. I still believe that Bitcoin is digital gold, and what I do like about Bitcoin is there's a dearth of supply, meaning there will never be more than 21 million Bitcoins ever created. Yeah, if that's true. And Jamie Dimon doesn't believe that's true. Maybe, I don't know. Yeah. So in terms of NFTs, they'll be relevant one day. I don't think it'll be for several years at least. But I think they'll be relevant. Like when I look at sports cards, I love baseball cards. I've collected since I was a kid. I think that's all going digital longer term. Yeah, and I'm a big fan of Topps' baseball NFTs. Yeah, because supply is low at only 6,000 per card. Okay. Next up, question is from Andy, who wrote, "Hey Chris, what are some businesses, according to you, which you think will go great in the upcoming years?" Yeah. So I still love software. I have for decades. As I mentioned earlier in today's call, Mark Andreessen, a great venture capitalist, always talks about software eating the world. And so what I would do is I would look at which sectors have not been disintermediated or disrupted by software yet. Okay, and then Renvir from Mauritius in my Silver MBA wrote, Chris, how can I find a good data room service provider for investors? Yeah, I'm not really sure how to answer that question. Sorry. When I ran my hedge fund, my prime brokerage firm and my custodial service was Goldman Sachs Execution and Clearing, and so I outsourced all that stuff. And I also use my fund administrator, which is Alps Price Meadows, to help out with all that stuff. I outsourced it entirely. Yeah. Okay, Joshua wrote, what's the best way to find hidden gems, small caps? Yeah. What you can do is you can look at, so there's a newspaper called Investors Business Daily, which is founded by a billionaire named William O'Neill. And William O'Neill is basically the opposite of Warren Buffett because he's a growth investor, not a value investor. So you can go to Investors Business Daily and you can look at what's called the IBD 50. And you can look at which stocks are in the IBD 50, which are growth stocks, and start doing research on them as well. And a lot of those are probably in the Russell 2000 index as well. Yeah. And I always start high level by asking yourself, in 5 or 10 years, will this company or the sector it's in be more relevant or less relevant than it is today? And then in my MBA degree program, I provide you with a great tool, humbly, that is a 100-step investment process. And I ask you close to 1,000 questions. And based on the questions you answer in one of the templates I provide you with, what's created is a 1-page executive summary and a 150-page investment write-up. It's a lot. As well as a dashboard with charts, etc. Just so you can visualize the fundamental valuation stuff for the company. Okay, next up, Susan wrote, good morning, Chris from St. Louis. Good to see you. Can you please explain what you mean by materially? Yeah, I don't know when I mentioned that earlier, but materially means a big deal, right? So a big impact on something. Yeah. Okay. Or material non-public information, like when people go to jail for transacting on stocks based on material insider information. It means a big piece of information they're using to invest in a stock that's not publicly disclosed. Yeah. Okay. Next up, Raymond. How are you? Oh my God, Raymond, it's been years. Great to see you. I met you in 2017 in December at Udemy, where I gave a presentation to new instructors. Raymond used to work for Oracle. I hope you enjoyed my Oracle discussion earlier today, years ago. And you also, I think I saw you at a conference. You gave me a New York Yankees hat. And thank you for that. And I hope that you also watched that movie we talked about when I met you in 2017, which was 61. A great baseball movie about Mickey Mantle, Roger Maris. And so Raymond wrote, who knows a lot about cloud computing, because he used to work at Oracle like Mark Benioff. Did you know Salesforce is being pressured by the board to get to 30% profit margin? Yeah, operating profits. Yeah. And disbanded the M&A team. Do you see a potential change in the SaaS go for growth model? Yeah, I do only with Salesforce, and it's not like Benioff. I think he's a great leader. I think the problem with Salesforce is they're a victim of their own success. Anytime a company gets too big, they can't grow anymore. It's a law of large numbers. And so growth investors get mad, and value investors don't want to buy the stock yet because it's not cheap enough. And therefore, it's stuck in no man's land in between growth and value. And nobody buys a stock when it's stuck between growth and value because most people are either growth investors or value investors. And so it's stuck in investment purgatory. And the only way to move it from growth to value, meaning 30% plus operating margins, etc., the only way to do that is to restructure the company. And that's why activist investors like Elliott and Carl Icahn, et cetera, get involved in companies like that, is to make that transition faster. Yeah. But I'm a still believer in SaaS, meaning software as a service longer term, because revenue visibility is great and margins are supposed to be high as well. Yeah. Okay. And that's what my business is too, a SaaS business. And that's where I'm migrating towards. I have a subscription service business model as well. Yeah. Good to see you again, Raymond. Okay, and then I've got Vaibhav who wrote, hi, Chris, how are you? Okay, moving on to Ravali. Hey, Ravali, good to see you. Good morning to you as well. Nick wrote, do you teach how to write a transition plan? Yeah. I do with respect to the venture capital bootcamp, where I have you write an extremely detailed report on your go-to-market strategy, etc. And anybody that has a company now, if you never wrote a business plan for it before you started, now's the time, because it can help you crystallize your thought process and restructure the company as well. If you want to learn more about restructuring, the best book to read on the planet is by the former CEO and McKinsey consultant of IBM, named Lou Gertzner, called Who Said Elephants Can't Dance? And he turned IBM around by getting rid of all their hardware stuff and focusing on software and services, which is higher margin. Yeah. Okay. Next up, Andy wrote, hello, I'm 14-year-old from India. How are you? And I've got a 13-year-old. This guy, he's 13 going on 30. Yeah. And this guy, this is Dylan. This guy here is 17. And this guy here is 18. He's at university now. Yeah. Oh my God, I have 3 teenagers. It's crazy. Anybody has 2 kids, they usually have a boy and a girl. Yeah. And I told my wife, how about, I want a daughter. Let's have one more kid. She's like, are you crazy? Yeah. She said, I have 4 boys in my house. Yeah. Which is true. All right. So Andy wrote, hello, I'm 14 from India. I just really want to do something big in my life. Love it. But my path is not clear. I definitely want to start a business. Can you give me some advice for the same? Yeah. Yeah, good for you. Yeah. So what I recommend is, like, working for other people. Other people is cool if you want to be an entrepreneur, because you can learn lessons from them on how to run a business and how not to run a business. And if anybody watching this call is frustrated working for somebody that mismanages you, I'm sorry you're going through that. I've been there too. But the silver lining is that you're also learning how not to manage people or how not to manage a business. Yeah. And then, Andy, what I would do is once you come up with a good business idea, I would make sure to write a business plan for it, including the financial statements. And you can always share it with me on this weekly call. And I'm happy to take a look and give you my humble thoughts. Yeah. Okay. Next up, Kyle wrote here. Let's go here to Zoom. Okay. All right. If anybody has a question in Zoom, just raise your hand and I'll come over to Zoom and I'll turn Zoom on. Thanks. I see there are people on the call there. Okay. All right. Next up, Kyle wrote, I'm 23 and I've been in and out of the doctor and hospital sick with no answers. I'm sorry you're going through this. And I'm constantly out of work. Finally, I was diagnosed with mitochondrial myopathy. I'm not 100% with investing. One day I'll be back. It really limits the work I do, but I take what I make and invest that to make my future bright. Awesome. And I really do hope you feel better. But yeah, good for you for thinking about investing at such a young age. Yeah. And if all you did was you took your annual retirement savings of say 20K, and you put it into, if you can do it, I know it's tougher when we're younger, and you put that 20K into the S&P 500, meaning ticker VOO, then in 20 years, that will be worth, you put 20K in every year, that'll be worth over $1 million. Yeah. The earlier, the better. Yeah. Okay. And then next up here, give me 1 second. Okay. All right, next up, Ravadi wrote, good news on graduation, Chris. Eager to meet you, Christina, and the classmates as well. Awesome. Looking forward to meeting you. And I think you're in San Jose. Yeah. Cool. Yeah. All right. All right. Next up here, I've got, and I'm going to turn on Zoom right now. And then if you guys have questions you want to ask me in Zoom, just start talking, and I'll hear it in the background. Just start talking. I'll come to it. Thanks. Okay, and just for you guys that are curious what that looks like, it looks like this. Here we go. Oh, Radu. There we go. Radu, can you hear me?
Yes, I do.
Excellent. How are you? What's your question, man? Good to see you. Radu is from Romania. He's in my Platinum MBA program. He's got a big heart. He's a good guy. He works in the technology sector as well. What's going on, man?
Good. I'm really tired.
You're exhausted, yeah?
I'm really tired, yeah. But I did a lot of, like a bit of marketing strategy and things like that. So it's nice. So I'm tired because I'm excited and I keep going over the night.
Right. Excellent. I know that feeling. I know that feeling. Excellent. And you have a question?
Not right.
Not now? Okay,
No.
cool. All right. I'll come back to you. Stick around because I'm going to be doing my silver MBA office hours in like 8 or 9 minutes, and I'll come back to you then. How's that sound?
Yeah.
All right, brother. See you soon. Thanks.
Great.
Okay, cool. Go back here to Wirecast. Okay. Okay. Next up, Conrad wrote, suppose that you made crypto. How would you promote it? Yeah. Probably social media and YouTube. I mean, YouTube is the biggest gold rush in history. It's the only gold rush in history where it costs you nothing to make the product and you get access to a gazillion potential customers for free. So I would definitely be using YouTube. And I'd probably study the methodologies from Gary Vaynerchuk, just do a search on Gary V, and see how he uses social media as well. Now, he's got a team of 800 people. It's big. But you can be an army of one and still have the impact he has. And what Gary V talks about is repurposing your content, which is something that Nintendo's been doing forever. Like Nintendo has these older 8-bit and 16-bit games, and they keep re-releasing them on newer platforms. And so I want you to use a page from Nintendo's playbook and repurpose content. For example, this weekly webcast I do. What we do is we repurpose the 7 best questions from the week into vlogs, also into TikToks. And I've started using TikTok a lot more. We just passed 11,000 subs there. We also use Instagram, LinkedIn, Twitter, etc. All that stuff by repurposing, working smarter, not harder. And I hope that TikTok is not banned, but it might be. We'll see. Probably not. Okay. All right, next up, Kyle wrote, do you believe the people of Congress, like Nancy Pelosi, should be able to invest? They can pass bills, policies favoring investments. Yeah, absolutely not. Yeah. I think that if you're a congressperson or any government official in a senior position, senator, whatever, or member of parliament in other countries, you should not be able to invest in single stocks. I think you should be able to invest in a select group of ETFs, like the S&P 500 index fund, for example. Yeah. But it doesn't seem ethical or fair that our politicians that set policies, that have access to certain information, should be able to transact, or any of their family members. Yeah. Okay. In fact, if you work at a large investment bank, whatever stocks you buy, you usually have to hold them for at least 30 days. And there are certain stocks on the restricted list. Okay. Meaning you can't buy them for certain ethical reasons. And I think the same policy needs to be put in place in government. Yeah. Okay. All right. Next up, Nitin wrote, what do you think about Zoom shares? Why is the value down for the past year? Do you think it's going to go up in the near future? Are there course content to analyze these sorts of things in the MBA? Yeah, absolutely. In the MBA program, I provide you with a ton of templates to analyze any type of investment class as well, and to start companies, etc. I provide you with all the tools you need to take your career or investment portfolio or company to the next level. Yeah. Now, in terms of Zoom, as with all tech stocks, tech stocks have gotten absolutely murdered in the past year. One of the reasons is that during the pandemic, a lot of companies, tech companies did extraordinarily well because we were all working from home. And so what happened was a lot of companies spent a ton of money on technology products like Zoom, for example, and everything else, and PCs. And then what happened was, I got to wrap this call up in a minute, sorry. Then what happened was a year later, the year-over-year comparisons got tough. And a lot of these tech companies overhired. And now they're overfiring. I think they're cutting into muscle. Yeah. And one of the reasons why the United States markets is down more than other first world markets in the past 6 months is because about 23% of the U.S. markets are tech stocks, like the S&P 500. It's the biggest sector. I'll show you here. So whenever you analyze a market, you always want to look at the breadth and depth of the market in terms of exposure by sector. This will teach you a lot about an economy as well. This is me buying time while this loads. But if you go to finance.yahoo.com and you type in VOO, I saw a picture of Mr. Benioff. He used to work in my building. He used to walk his lab in bare feet in the lobby at One Market Plaza in my building. Okay, so this here is the S&P 500 fund. Okay, and this is the only S&P 500 fund I buy because the fees are only 3 pennies for every $100 you put in per year. But if you go to holdings here, you'll see the breadth and depth of this sector. And here, 23.7, oh wow, it's 24%. of the U.S. markets is in tech. No other major market in the world, first world market, has this high a percent of market cap in tech. And that's why the U.S. markets have really underperformed over the past 6 months. Yeah. Okay. All right. Let me go back over here. Okay. Okay, next up, Joshua wrote, what do you think about the 3M earplug lawsuit news from yesterday? Yeah, I haven't seen it. 3M's ticker is MMM, which stands for Minnesota Mining and Manufacturing Company. I haven't seen it, but I wear their earplugs every single night, actually. Yeah, but I will take a look at that now. Thank you. Yeah, and when I sleep, and I went to Stanford University for a sleep study not too long ago, we analyzed why my sleeping wasn't great. It's amazing now. One of the reasons was, so I wear earplugs every night. I'm a light sleeper. And during the night, I take the earplugs out. I don't remember it. I take them out and I put them neatly on my table. Always perfectly. It's bizarre, but I don't remember doing it. So one of the quick fixes we have for that is I put surgical tape, just the white tape, on the outside so I can't take them out in the middle of the night, which helps, yeah. But I'll look in that lawsuit. Thank you. Okay, cool. All right, I'm going to wrap up this week's call. If you guys have additional questions, please ask me during my Silver MBA call. It starts in a couple of minutes. Or you can ask me on my Gold and Platinum call later today, which is a 2-hour call starting at 11:20. Or if I have one-on-ones with my Platinum students today between 1:30 and 3:30, you can ask me then. God bless you all. Have a great weekend. Stay safe. And I'll see you next week. And as with all of my weekly calls, I end it with this very short video I licensed. It's a Steve Jobs interview. I licensed it from the Silicon Valley Historical Association. This is life-changing video. God bless you. Hit like and subscribe and all that stuff. And thank you.
When you grow up, you tend to get told that the world is the way it is, and your life is just to live your life inside the world, try not to bash into the walls too much, try to have a nice family life, have fun, save a little money. But life, that's a very limited life. Life can be much broader once you discover one simple fact, and that is everything around you that you call life was made up by people that were no smarter than you. And you can change it. You can influence it. You can build your own things that other people can use. And the minute that you understand that you can poke life and actually something will, if you push in, something will pop out the other side, that you can change it, you can mold it, that's maybe the most important thing, is to shake off this erroneous notion that life is there and you're just going to live in it, versus embrace it, change it, improve it, make your mark upon it. I think that's very important. And however you learn that, once you learn it, you'll want to change life and make it better, because it's kind of messed up in a lot of ways. Once you learn that, you'll never be the same again.